Hello everybody. So today a quick video on IREN. IREN, is it a 5 PE? Is it too cheap? I think it's too cheap. That's the reason why I own IREN. I sometimes add to it on drops. You may remember that day when it shot up plus 30%. That wasn't a good day to add. Now the stock is back to almost the levels it was prior to that video. And so I like the stock right now. There's a few things I don't like about IREN, and whenever I discuss it, people are quick in the comment section to yell at me and say, oh, you don't understand IREN. No, I understand. I just don't like that they don't hodl. I wish they hodled. I wish they kept the Bitcoin on their balance sheet. I think eventually all companies will hodl and will understand the value of having a Bitcoin treasury. And I wish they didn't have the AI division. In fact, their profit on the AI division and the AI hardware, it went from 900,000 to 800,000. So they have a drop in the profit in the AI hardware. I wish they didn't do that. The speed of depreciation of AI equipment, if you watched Nvidia's keynote yesterday, the speed at which these things depreciate, I would rather have them not hold that. You know, a Bitcoin miner, the useful life of a Bitcoin miner is 5 to 7 years, roughly, right? The useful life of a GPU is something like 6 months or 1 year or maybe a year and a half, but I doubt it's more. So I wish we didn't have an AI division, but because they don't hodl, because they don't have an AI division, the stock is stupid cheap. It's just cheap, and you know, why is it so cheap? Well, there's many ways to assess why it's cheap. You may remember my prior video where I calculate the full value of IREN, and I end up finding out that they have a negative enterprise value, which typically only happens when a company is about to go bankrupt or something, but they had a negative enterprise value. So not the case anymore because they raised some funds. So if I were to redo that calculation, they would have somewhat of an enterprise value. But today I want to focus on price to earnings, P2E. And just focus on that a little bit here. So how much hardware profit did they make? 40.9 million. They made that, of course, in 1 month, right? So 1 month, 40.9 million times 12 months. I'm taking an instantaneous. I'm taking a picture of the profit as of right now. Yearly, annualized, that will be 491 million in profit, right? That's the hardware profit right here. And the market cap is 2.47 billion. Therefore, the price to profit, or the market cap to hardware profit, if you want to call it like that, is a 5. It's a 5.03. And of course, these companies, because they need to optimize their taxes, the accounting works very differently. So we can't use PE for these companies. At least I don't think we can. Anyways, to give you an example of how cheap it is, this is a 5x for a company that's predicted to grow revenue yet again. You know, they're predicted to grow almost by 50%, almost by more than 50%, really, on the hash rate. I'll get back to that in a second. They have plenty of growth ahead. This is not a flat company. They have plenty of growth ahead. They're trading at a 5x. Let's look at literal house of cards, like companies that are on their way out, companies that are sunsetting, right? Walgreens, if you take Walgreens, it's not going to end well at Walgreens. You have 30 billion in debt. The company is literally on its way out. It's trading at a 6.5 times earnings, right? If you take Western Union, another company that is a house of cards, too much debt, lots of competition from digital solutions, it's trading at a 6x PE. So I'm finding these two companies that are on their way out, they're trading a good 20 to 25% more expensively than IREN. So I don't understand. Some companies are house of cards. They're trading at these high multiples. Anyways, this is crazy to me. And remember, of course, IREN has no debt. And a lot of companies, typically, when they end up trading at a 6 PE, they have a lot of debt. Typically, look at the auto. The auto companies have so much debt. I wanted to pull up Volkswagen here. I don't pull up Volkswagen in there because they have too much debt and the PE ends up being a 2. Anyways, IREN doesn't have debt. They finance by diluting, and the dilution is either today or in the future. In the case of a convert, the latest raise that they did, that's dilution in the future. But dilution, and this is a big misunderstanding that I try to address in my videos about miners, about MicroStrategy. Dilution in the case of a miner is a good thing. It works a little bit like a REIT. The dilution is here to grow the business. You grow the business via dilution, and if you're fully stuck with the most traditional lenses of finance, you're not going to look elsewhere. You're not going to look at alternative ways to look at capital raising and capital funds. But I'll tell you the way I look at it. So the way I look at it, they had about 100 billion outstanding shares in I think it was July, and now they have 189 billion. We'll see how many they have later on. Anyways, the point is they grew their shares. If you go year over year, if you go back from this September to that September, here I'm showing you on the chart, they grew shares by 190%. So they diluted quite a bit. They grew the shares by 190%. But what did you get? What did you get for that dilution? Well, they had to pay. They had to pay for the miners, right? So you get what? You get a 450% increase in mining capacity. Like, in my view, that I mean, they went from zero to everything. This company grew so fast. So that dilution sucks, but the company grew way faster. And then keep in mind, a lot of the value of this business has to do with the data center expansion and with the value of the power access. One megawatt of power access is valued at about $300,000. It depends on how you calculate it. But you can see they create value by building the transformers, building the infrastructure on their sites. And their sites are very valuable and becoming more valuable to big tech. And so that's a 17x expansion, for example, for a Childress site. They are working towards having a 1.4 gigawatt site, which is nuts. There's only a handful of those available around the U.S. And that's gonna be April 26th. They're moving forward by April 26th. So they did all of this business. Sure, unfortunately, they bought a little bit of Nvidia. I can't imagine the depreciation of the GPUs. I can't imagine. That's okay. So you get quite a bit of growth for a bit of dilution. You get a little bit of dilution for a whole lot of growth. And so in my book, that's okay. And the convertible notes, of course, that they did, which if it's a convertible note, that means there will, the converts will likely convert. What converts will likely get the shares. So that's dilution in the future. Converts are dilution in the future. It's still a form of dilution. To me, that's going to be used to grow, to keep growing. Because keep in mind, by the first half, by the end of the first half 2025, they're predicted to grow from 31 exahash to 50 exahash. They have an option for miners. They want to exercise that option. A lot of that money is going to go towards that option. Again, that money is not raised just for the joy of raising money. It's raised to grow the business and to become an ever bigger business. So in other words, that money they make, for those 41 million that they make each month, that's gonna grow. That's gonna keep growing thanks to the expansion, and it already has. You see, they move October 24, they had 19.9 million. November 24, they had 24 million. December 24, they had 40 million. Will they have 50 million in January 25? 59 million or 60 million in February 25. Will they keep growing that way? Well, I hope so, and at least that is the thesis. And so the key question, and I'll conclude on this, the final question is of course, any Bitcoin miner, it's a tension between the rise in the mining difficulty and the rise in Bitcoin's price. But this is why I'm comfortable doing a 12x, taking an instantaneous form of profit and calculating it instantaneous. I'm comfortable doing that because even if the mining difficulty increases, you may mine less Bitcoin, and you will inevitably mine less Bitcoin because it becomes more difficult to mine Bitcoin as time goes on. Every month, mining Bitcoin is a little bit more difficult. Sometimes it drops, but very rarely. So of course, if everything stays constant, the rise in mining difficulty will make you make less money. But what has happened to the price of Bitcoin? The price of Bitcoin has outpaced the rise in mining difficulty. In fact, if I look at last year, mining difficulty rose by 57%. Bitcoin rose by 132%. So it more than offset the rise in mining difficulty. The question is, in the next 12 months, if we grow another 57% in mining difficulty, will the price of Bitcoin grow another 57%, i.e. will we be around 155 to 160K by the end of 2025? I don't know. I believe so. It's looking really good, but I don't know. But the point is, I'm comfortable doing it flat, and I'm not even including the rise from them exercising those options in the convertible debt. But that's a tension we always have to look. And when it gets dangerous, when miners get dangerous, is when the Bitcoin price is flat or goes down, but the mining difficulty just keeps increases. You ideally want those to rise hand in hand, line to line. You want them to rise at the same time. The two final factors that I want to point out. So like I said, sometimes the mining difficulty goes down. That's because old miners get unplugged. If your cost of power is too high, if your cost of power is like 5 cents, 6 cents a kilowatt hour, you're going to unplug your miners a lot. So that's one aspect that may lead the difficulty to go down. And an aspect that is almost never discussed whenever we talk about miner is the transaction fees that they make. They make a lot of money on transaction fees sometimes when the network is congested. You may remember Ordinals a few months back now. You may remember that. So if we get into a bull run, there may be more transactions on chain, which means that they may make money from the transaction fees. And eventually, I believe, but most people in this space believe that eventually the transaction fees will be financing the mining operations altogether. It will all come from the transaction fees eventually. So anyways, is it too cheap? I find it too cheap, but that's just me. It's not investment advice. It's not financial advice. Never on this channel is there any investment advice. None of that. This is just entertainment on this channel. Please like, please subscribe. Thank you so much for watching, and have a wonderful, wonderful day.